Hey, what's going on YouTube? Kenny here. So today I want to talk to you about a series of companies that it's combined into an ETF that's down about 85%. And you say that and you say, damn, Kenny, that looks like a great buy, or it's either going to go out of business. Well, I don't think it's going to go out of business. Obviously, I'm leading the witness here because a lot of you already know what I'm talking about. But if you're new to this channel, then I'm talking about OIH, or the oil play. And so I want to talk to you about oil, but not in the way that you think I'm going to talk to you about it. Previously, for a number of months now, we've been talking about OIH and XLE and talking about the supply and demand dislocation. We're talking about the macro research. We're talking about the due diligence. We've been talking about how OPEC interplay looks like with the WTI. We're talking about, contango and backwardation and all that other stuff. But today, I just want to talk to you simply about the chart and how to think about it. And I want to also talk to you about just the mentality involved. So if you're new to this channel, Redcliffe Research is a data analytics kind of firm, background at least, that deals a lot with anomaly detection and taking signal from noise and making trades off of that. The OIH play is indeed a little bit of that, but it's mostly macro research. And so for those reasons, these things take a little bit of time to play out sometimes. So what I want to talk to you about, again, is mentality. So let me show you the day chart. On the day chart, if you would have taken one of our signals, you might have entered, let's say right here, right? And you definitely have about a 25% downturn from here, 22.3% if I'm generous, and then maybe a little bit more. And we're holding some pretty heavy options calls two that are at the 25 strike up here. So if you're holding those, you might be bleeding out a little bit. I'm definitely bleeding out, but let me tell you why I'm very bullish, and let me talk to you about mentality. And once I stick with me here, because I really think you'll appreciate this. And this is not like me talking down to you or anything like that, but I know if you're new to the markets and you've never seen a cycle or witnessed a cycle, if you've never thought about some of these things, it's going to kind of overwhelm you, and you're not going to be able to see kind of like the forest through the trees. Again, this is just from experience. It's just like the first time, you get your first day and you're like, hey, this is a little bit easier than I thought it was. I just got to kind of ask, the first time you get that first pay raise and you ask for it. And the first time, you sit there in the same room with the president and you talk to him, those kinds of things, right? Like, pick your example of cool things that you've done in your life that first time you did it, super exciting. The second, third, and fourth time, you're like, oh, this is how it works. There's a system involved and it's systematic. So this is the day chart for OIH. And if I'm honest with you, because this breakout failed right here, right? So this breakout of 250 needed to happen. It didn't happen, so it failed. So here's what, indeed I think we're looking at. For sure, I think that, we're looking at either a bottom here or somewhere in the 167 was what I was calling for. But we did add up to our position here, and that's because our calls are laser cheap now. Laser cheap, that doesn't make any sense. Anyways, they're very cheap now, and obviously keeping the same strike price going up to 250 because we have them until January 22 anyways, so we have plenty of time on those. So we just loaded back up the 250. We're gonna load up some that are closer to our strike point, just to kind of get some profits on the way back up, because we're gonna fight our way out of this, right? But if you're holding raw equity, gosh, even with a 25% drawdown, this is nothing. And I'm going to show you again. I'm taking my time to really show this to you. And if you're a longtime Redcliffe watcher, long time by 7-8 months, kind of how this is going to play out. And I really think you'll appreciate kind of my thinking behind this, And I know there's a lot of people that are really kind of like underwater on this trade. And so I just want to show you that it really isn't that bad, and it kind of like makes sense of this. And especially when you have OGs like Levi kind of worried about the trade. But I'll show you again right now why this is not so bad and how you need to be looking at this. So if I switch over to the monthly chart, and you take a look at this, right? And let's go ahead and take away this. Let's take away this line here. So if you're new to this channel, we do everything here in one take, which is why sometimes we might not get the point across exactly, but I think it's just more natural, and everybody kind of likes it better because I'm really sick of the jump cuts. Okay, so one second. If you look at this chart, what are the all-time highs? All-time highs are here at 1500. What are the all-time lows? Right here at 75 during the pandemic, where, well, actually, around here where oil was sitting on almost nothing, and you're paying tankers to sit in the ocean doing nothing, right? So, okay, let's compress that now. All right, what is the middle of that, right? What would be the median? Okay, so between 75 and 15, 16, whatever like that is about 700. Let's just say 800. Make it call it a day. So the mean reversion is, you would say 800, right? And I'm not saying this to kind of make light of it, okay? But look at a couple things, okay? So over the time of since 2002, since its inception here, right? You have massive volume here where you lead the turn and you have this spike, right? And all-time highs. Look what's happening to the volume right now, right? But look at where the stock price is. Now, I know this is going to be obvious since I just pointed it out, but look at where the lows are. Like the bottom is literally right here. You're not on the bottom in terms of long term. You're on the bottom. If you hold this for 5 years, say it's 2022 right now, and you hold to 2027, it can likely hit 800. And with a straight face, I could say like right now, because bounces are very heavy and hard often from the bottom, I really think, like, I'm not just saying this, just to really shill something that I'm holding a lot of, and I am holding a lot of it. So I'm underwater probably more than anybody. 400, we made the call for 400 in July. We obviously missed that target. We would have needed a big spike like this. We didn't get it. But, by year's end, if we get to 300, I think that's completely sensible. Look at what that looks like in the scale of time, right? 300. So, really wanted to show off this chart because I'm trying to tell you that we've bought in a great place and we've crossed over. In fact, if you look at on the monthly chart, this SMA line that we have for trading, it's bouncing right off of it. So it should absolutely bounce here. And I'll show you some key things that I'm looking at as well. So if I'm honest about the oil trade, if you look at the DeMark indicator, and I'm going to show you one other thing that's really going to make sense of this, but if I'm looking at the DeMark indicator on the monthly chart, you can see when we showed that low and I was printing it, it called it to the T, right? So how close are we? Well, look, if 13 is extreme exhaustion, so if you're new to the DeMark indicator, 13 is extreme exhaustion, 9 is intermediate exhaustion. It calls these bottoms. 13 are big kind of exhaustion candles. It looks at sentiment. It looks like kind of trading algorithms. Not algorithms, but, price action. Okay, so how early are we in the count? We're literally sitting on a 1. And you know that even a mid-count would take you to a 9 before we pull back. And yes, does the price action look bad right now in a vacuum under a short time period? Yes. And, maybe that's my fault for not really expressly saying this should go into our notebook portfolio. But, I did think that there was a sensible trade coming up here. But in fact, not that we're bag holding, but the macro research is good. And unless you think oil is going to go away, it's going to work out. And so these companies will continue to make some money, and they'll continue to do the things that they're going to do. We've made the case before, and so we won't make that case again. But I do want to show you one other thing that I think will kind of bring the visualization to light. So on the monthly chart, and this is not curated, I didn't stretch any of these out. I literally opened these up as is. Both of them are looking at logarithmic change. And so if you look at this, right, look at this chart, right? All-time highs, and we're basically at all-time lows, pretty much, right? All-time low being right here. Why would you not want to buy here? Where do you want to buy a stock? So on the right is Tesla. And you're wondering why, people like me are thinking about shorting Tesla. In fact, we have ARQ puts. And we're short ARQ. And today it was funny. Somebody mentioned, hey, the market's selling off and RK is going up. What the hell? But RQ wasn't, right? And that's why we're specifically aligned against RQ, because RQ has Tesla in it. And am I bearish on Tesla? No, I'm very bullish on Tesla as a company, and I think they could eat Ford's lunch if they had to. But right now, it's just a numbers game. So look at how they're trading and just kind of where they're trading. Even if you took this chart, right, and you said, okay, Tesla's right here. Well, in the kind of envelope of time, where do you think Tesla is going from here? Do you think it's going to go to 1,000? Like, is that realistic? Is that logical? Or do you think it does something like this, right? And that's generous, And that's why we keep talking about, the EV second wave. If we get to 400 and it bounces, that's very generous, right? That's what I would say. But, there's definitely a chance that it could just kind of whittle its way back down to 250 and then just work its way back up. And that would be absolutely healthy. Amazon did it. A lot of the greatest companies in the world have done it. So not a knock on Tesla. It's just the way that price action works and that stock price works. So again, I sat there and thought about this for a long time, and I guess, I really kind of got to explain my thought process here. And my thought process here is, wow, did we get a good fucking deal, right? So if you're wondering if I'm going to double down or triple down or quadruple down, absolutely. And I'm going to show you how this works in a trade that we took today with UVXY. It's all about double, tripling, and quadrupling down. And again, look at this, rising in volume, right here. Look at this. What's this doing? Decreasing in volume. So, the indicators are there. It's going to take time. It's not a big secret, but that's how you really accumulate wealth. Take these outsized kind of moves where everybody thinks, oh, wait, Tesla's going up. Do I buy up? Yeah. If you're a momentum trader, you got it at 250, sure, you can get to 400. Can you get to 400? You can get to 450, sure, you can get to 700. Oh, where's the top? Who the fuck knows? Nobody knows. But, when you're looking at a thing that's outstretched like this, and it's coiling and kind of like bull flagging here, or maybe a bearish pendant, it might go up. But what logically could happen here? Unless Tesla takes over the world, which it could be the next Alphabet. But even that, look at that stock, right? All right, so I think I've made my point there. Again, really look at this and think about it. You are buying, look at this again, one more time. You are buying at the absolute bottom. You are getting a deal. This is on sale. This is like what all the great people are thinking when they're thinking about the stock market, right? And I'm not the only one. This is not just obvious to me. There is a sense and there is a sentiment against oil, obviously, right? That's the big problem. And so if you discount that and you say, okay, we never get to 1,600 again, fine. But could we get here? I think so. 800, sensible, right? I think we traded there for a while, and that's the mean reversion, right? Can we get to 600? Absolutely. Can we get to 400? I don't see why not. Can we get to 250? Yeah, absolutely. And that's what you have to look at. It's either that or every oil company in the world goes bankrupt. So unless you think of it in that terms, then yeah, if you think the oil companies are going bankrupt, then I don't know why you're in the trade anyways. But that's kind of how I'm looking at it. I think that's a sensible way to look at it. So, okay. In the markets today, we definitely sold off, and it's definitely just not looking really good. Only thing that kind of survives here is NVIDIA right here. We talked about kind of places we could hide, and there was no place to hide today. And in fact, it spiked up so bad. I think the VIX was up almost 30% at one point. And so we did short UVXY, put some UVXY puts on at the end of the day. We tried to take an entry early, had to close that out. We got blown out. We didn't really get blown out. We lost maybe 10%, which is nothing for a same week options trade. But we did re-enter twice, and we are now profitable, sitting at, I think, 20% gain on the UVXY puts. But let me show you something and kind of how we were talking through it in the chat, and I think you'll find this funny, and then we'll back test it too a little bit. So we bought SOS puts here. Okay, I started this one. This is going to be very risky. Be prepared to lose it all. We bought $596 worth of UVXY, which is a lot for this account. This account is sitting at around $2,800, almost $3,000, I think. Pretty profitable. I have to audit it again today, but I think we're up there. We started at $500, and so, we sent out the signal, and that's where that's at right now. So, we went down, and again, I told you we got out for a little bit, but then we opened some SOS puts. What else? Let me go down here. Okay, so I was trying to showcase this, and essentially it just means, I I was just trying to be glib about it, but really one spike, one day, and it basically kind of retraces. There's rarely a 2-day kind of spike after spike, but I'll show you what I'm talking about, unless there's a crash, right? And then there's this lot of volume in here, so it means there's a battle going on, super conflicted. But let me show you some other things, right? And so we went to the DeMark, on the 15-minute, and it did show this exasperation or this exhaustion. But then we said the VIX needed to collapse within the next 30 minutes and stay under 37.42 to make sure that this disqualification line didn't print. And indeed it did. So what happened is it spiked up over, and then we were arguing about it. And we said we were going to do a 3 tranche play. We essentially said we are going to buy, where is it? I said, try to find it. Here it is. Not an official signal because all the moolah is deployed, but I'm going to do a 3 tranche play here. Buying about $300 worth, 35 strike. At the 35 strike, so I bought at about 37. I buy again at 38.50 and again at $40 if it hits it. So 38.50 was the second spot we're going to buy, and you buy more. And I'm going to show you why, and I'm going to talk about back testing this, right? So we scroll down and we go through all that, right? And then Richard decides he wants to wait till 40. The stock tops out. Here comes the 38.50 next entry rolling up. Damn, the VIX is calling me out. Bearish engulfing for the win from Nathaniel. Okay, so we go through that whole thing. I'm going to hold off a little bit longer. See if we tap 40. And then Mike says he had all 3 already. So I don't know, man. Whatever. Anyways, here's the crazy thing. It goes up, and we said, okay, I'm at 3 contracts, and I'm adding 4 more to make 7 if we hit 40. So what is my point? So the first one, I had 1 contract, okay? As we go up, I double. I'm going to hit 2 contracts, right? And the next kind of tranche, I'm going to double again, hit 4 contracts. Okay, so when it has these asymmetric kind of gains, and you know that for a fact that something has to give, especially when it comes to the VIX, these are very rare opportunities where you have to kind of pounce, right? And so as we get closer, essentially Richard never got it. We flushed down, and he was waiting for 40. We did get it. We get filled at 38.50. It tops out high of day 38.60 something. I want to say 38.65. Oh, here it is. Yeah, 38.65 was the top for the day, the tippity top. So we got filled 15 cents early, but I still think that is a great play. And here's the thing. Definitely got to talk shit. It's like, see, good plan, Richard. And we were up almost immediately after that because it flushed. And then, we closed way below. And now I think we're after hours at around 36. And there's a new countdown starting. So absolutely going our way right now. Could it spike out in the middle of the day? Yeah, sure. But the plan is still in place, and we can still buy more. All right. So now let me talk about back testing real quick and kind of send you home on this and show you why that I'm not really worried about these plays, and I'm not just like guessing. A lot of people call a lot of this stuff gambling. In a vacuum, every play here is a gamble. In a strategy, you're the casino and you're setting the terms, right? Excuse me. All right, so this is back testing. So I went back to March of the crash because this is like a black swan event, right? So really, really impossible to read a black swan event. So again, if you think that there's going to be a crash, then this is all off the table. But if this is not a crash and just a normal correction, which I indeed think it is, then let's play this game. Anytime is 25% or better, you take the trade. Let's see how good we do, right? So let's just play this out for a little bit and see kind of what happens. So you're going down, and then you're going down. Okay, there's a spike. That's not really a spike. Okay, that's an up candle, but that's definitely not 25%. I'm going to show you what that looks like. That's so from this candle to this candle, about 16%. That's fine. Let's keep playing it. Okay, that's a spike. Okay, so here we go. So if we took this trade, right, so we go from the close to where this is at, it's 11%. So 13%. So you wouldn't have taken that trade. But if you say from there to the next candle, Let's play this out. Okay, so let's say from this candle to this candle, let's see if it made it. So the close of the day up here, up to here, you wouldn't have taken that trade, but 18.66%, you could have taken that trade. Or if you said in aggregate 25% off this low, right, you would have gotten 33% up to here. So it did move 33% up, and you took this trade, right? You know, here you go. So say we take that trade, 33% up there, it crossed our 25% threshold. We take that trade. Look at that. The next day, down. The next day, kind of flat. Next day, down, down. So, you know, we do have 4 days left on this option. So if you would have gotten to the tippity top like we did, we definitely get a pullback in the next couple of days. Even if you just take it back 1 day. And, of course, we have very volatile options, looking at almost 5 times leverage. So 13.13% move equates to almost 120, 150%, depending on what you're looking at. With 5 times leverage, obviously, it's more than 50%. Okay, so next, let's just keep going. At least a couple more times, just kind of show you that. Okay, so even here, you know, you could call this. You could probably call this. You know, this is like closes at 21%. But yeah, if you go for 21% and you hold this, and you're gonna say you take this. I mean, this is kind of a weak one, but say you take this VIX spike. It's barely a spike. Let's see what happens. Let's see what happens the next day. And guess what? It sells off. You know, it's almost on cue, right? So I mean, like, let's just let it play out. And this is definitely one you would want to take. You were down here. Big spike. So, you know, this is an engulfing candle, but like, hey, let's take this spike here. Let's just say we take this spike. And there's a couple reasons why we'll take this spike, but let's just say we took that one. Guess what? Look at that. You know, it's really scary when you don't know the future. But, you know, if you back test this and you look at that, like, look at this. The very next day, you know, this is down from the high. If you got the tippity top, or even if you did, you know, you're getting 12% or more. And then obviously we have leverage. So, I mean, that works out again. Let's play this game a couple more times just to kind of show you. And see, this is all just, you know, just pulling back, pulling back, pulling back. Oh. Big spike. Okay, here's one that may not work out for us. Okay, so we had this big spike. Guaranteed that's more than 25%. So if we took this, it's going to be scary on open. If it goes back up over here, it goes up almost 9-10%. But if you would have held, you're closing at down 12%. So it still worked out, even though it's 2 candles in a row that look really bullish. And then guess what? Look at this. We flush back down. What is my point? My point is, if you back test this and you take a look at it, it kind of just works every time. And we'll let it play out here now, and I'm not going to like kind of gauge each one, but you kind of get the point, right? Let's just look at one more just to kind of be sure. But like, especially some of these big ones, like, yeah, don't take those, you know. But if we get these 25% kind of spikes, there's a spike. So you would have taken this spike, right? And guess what? Look, again, every fucking time. So is it like free money? Not in a vacuum. In a vacuum, you can definitely get blown out. If you think there's a crash, and again, if you go back here, if you think there's a crash, this is the crash, right? Yeah, you'll get blown out all day long. If you don't think there's a crash, you know, in general, for the most part, it's going to work out in your favor. Because look, what's going to happen? It's going to decrease again. So I think you get the point. All right, so hopefully you liked that video. I think I really needed to make that video, and I'm really not gonna like sit here and try to apologize for a bad call or anything, because I just don't think it's a bad call yet. You know, I really just think that, you know, it's just gonna take time. It's just price action. It's just stocks doing stock things. So, you know, if you're not able to kind of stomach that, then you probably shouldn't be in the market. But I know if you're watching this channel, you are tough enough to stomach it, and you generally kind of get it. You're not listening to some baboon talking about the next penny stock and all this other stuff, you know. So, I mean, give yourself some credit. You know, it does take time to develop. You know, I've definitely lost money in the first couple of years I was trading. If you're in the first couple of years of trading, you're making money right away, and you're just a great investor. Good for you. It's actually probably, it's kind of actually a less of a blessing than you think, because I think if you take your licks early, and you have that resilient mindset, then I think that's the more important thing. And that's what I'm really trying to convey to you and kind of trying to talk to everybody about. So, I mean, it's not really a pep talk because I think that I'm trying to give grown adults some motivational advice or anything like that. But really, I'm just trying to tell you, like, it's from a bro to another bro, or a bro to another broski gal. It's going to be fine. And so, like, most of your trades are going to work out. Gravity in the stock market is up. It's not down. Like, stock price generally goes up over time. That's gravity in the stock market. So unless there are bad companies, and if there's an entire ETF, hard to say that there are going to be enough bad companies in there to just really tank it. Plus, it'll get rebalanced, right? Okay. What else? That's pretty much it. If you're new to this channel and you watched all the way to the end, please comment, because I would love to see that somebody new found this and worked their way all the way to the end. More than that, we do have a free macro newsletter that goes out in the beginning of every month and kind of sets you up for the trade. And we do live streams on Tuesday. We'll be doing a lot more due diligence, and we have a lot of interesting, really exciting announcements coming up. But yeah, if your portfolio is getting beat up, yeah, I get it. So, like, our OIH trade, my OIH trade was up about 96% at one point. And that's with a lot of shares. And now I'm only up maybe 3%. So I had a big drawdown as well. Obviously, I'm using options, so they're highly leveraged. If I was in raw equity, it wouldn't look like that. But what is my point? I'm flat and I'm burning up as well. So I get it, but I'm not scared. I'm no scare, as we say in the chat, because I've seen this before, guys. I've seen it before. Look at Bitcoin. Everybody thought it was going to crash to the ground. And I'm not even calling for that here. We're actually on the bottom. We're going back up. So this is, think about this. This is 2018, 19 for Bitcoin. We're about to move, right? 19, 20, 21, hopefully. Hopefully it's more like 20 going into 21. But we're about to move is what I'm saying. So, all right. Hope you like this. And I'm going to get out of here. Thanks for watching. And we will see you tomorrow for the live stream.